Hey, it's Nate with Navigator Bookkeeping here with the next video in the business structure series. The business structure we're doing today are C-Corps. Now, C-Corps are kind of your classic corporation. When you think about corporations, you're probably thinking about a C-Corp. If you're talking about big publicly traded companies like Google and Apple and all those guys, those are all going to be C-Corps. So, what is a C-Corp? Why is it beneficial? Well, C-Corp is a really formal type of business structure. There's shares given out to owners. There's different share structures between managers and owners, and there's a complete separation between personal life and business life. There's a corporate veil, as people say, dividing the two, so that anything that happens with the business is not going to at all affect personal finances or personal life. When we talk about S-Corps and LLCs like we did in the past, oftentimes those are taxed as pass-through entities, which means that what happens in the business is going to pass through to your personal return. C-Corps are different. They are not personal. They are not pass-through entities. So basically you're going to get paid wages from the company, from the corporation, just like you would at any other employer. And that's going to be the only connection between the two. So you're not going to get write-offs from owning the company necessarily in the same way. Pass through, losses are not going to pass through, gains are not going to pass through. So it's very separate, very formal. So what does that mean? That means that when you're setting up a C Corp, there's going to be lots of rules you have to follow in the way you file, in the way that you run the company. You need to hold certain meetings, you need to keep minutes. It's very formal with those obligations in that sense. So let's talk about taxation. C Corps, unfortunately, are one of the worst business structures tax-wise, because what happens is they're actually taxed twice. So there's double taxation. What happens is that any profits in the company are first taxed at the corporate level, no matter what happens with distributions or anything like that. So if we bring $100,000 in profit, that is going to get taxed at the corporate level before anyone can even take anything from that. And then when you take the money as an owner or an employee or a manager, when you get distributions from that or get paid from that, you're also going to pay taxes again. So double taxation. So when we talk about S-Corps, when we talk about LLCs, S-Corps can usually avoid that double taxation. LLCs, as sole proprietors, still are doubly taxed in some way, not with a corporate tax, but with a self-employment tax. But C-Corps are known as kind of the one business structure where you're always going to get that corporate taxation, and there's no way around that. You can't avoid that. You're going to have to pay that. So you may be thinking, why do I want to do a C-Corp? It's really formal. There's lots of obligations when I set it up, lots of requirements, and I'm getting taxed twice. Well, if you're a small business owner, you probably don't want to use a C-Corp. C-Corps are meant for businesses that are trying to grow large, that are going to maybe go public eventually, that are going to have large investments coming in, that are going to have a lot of different investors or a lot of different owners and people with different stakes in the company. So if you think you're going to have, quite a few people with different percentages of ownership and things like that, and you want to keep everything really formal and separate, then a C Corp may actually make sense because it's going to help you keep those requirements and keep that formalness. If you're not looking to get to that point, if you're going to keep it to one or two owners, if you're not looking to go public eventually, C Corp is probably not a good choice for you because you're going to get that extra tax and you're going to hit all the formal requirements. So those small businesses out there, micro businesses, definitely C Corp's not a good choice. You'd want to go with an LLC and then probably set up your taxation as either an S Corp or a sole proprietorship or a partnership, depending on kind of what that looks like. You can look at our previous videos for some more information on that. But C Corps are really going to be for those businesses that are looking to get large, looking to grow, looking to eventually go public or add in more owners. So hopefully that's some helpful insight. In our next video, we're going to kind of review all the business structures that we went over so you can hopefully make the right choice for you.